Hi guys, welcome to our first educational video, and today I want us to talk about introduction to Forex. What you need to do to get started, what is Forex, what you need to get started. Forex as instruments of the financial market. The big players of the market, those are the participants of the Forex market and Forex market. As I said, this is our first educational video. My name is Marvin and I have my friend here.
Done. Let's do this.
So now, you said you're going to talk about introduction to Forex, what Forex is, what you need to get started, Forex as instrument of the financial market, participant of the Forex market, and Forex market hours. Introduction.
Introduction.
Forex as instrument financial market. Don't mind about my handwriting. Participants of the Forex market. And lastly, Forex marketers. So basically, this will cover all you need to know about Forex. So now, Don, before we start this video, before we start the introduction part, there is misinformation about Forex outside there. Okay, what was your thoughts of Forex before you started trading?
Okay, before I started trading, I used to see my sister trading. So what was in my mind was when the candlestick buys.
Okay, generally.
Okay.
What was your understanding about Forex?
I knew Forex is just like a betting, just like betting.
Anyway.
You just take.
Okay.
When it buys, you buy. When it sells, you buy.
All right. So basically, this guy knew Forex is betting. Like you can just buy or sell anyhow.
Yeah.
So once the odds favors you, that is when you make money, right?
Yeah.
So today I want us to give a brief introduction of what really Forex is. Forex in full means foreign exchange. Foreign exchange. It's all about trade of currencies. Fiat currencies. When I say fiat currency, means local currency, local currencies of different economies. Local currency of different economies. And for example, here in Kenya, we have Kenya shillings. Here in Kenya, we have Kenya shillings. So these are it. More better. Here in Kenya, we have Kenya shillings. So Kenya shillings is our local currency. So it means that each and every economy gives its currency to the forex market so that it can be exchanged. So the process of exchanging money, that is from one currency to another, is what we call forex. Okay. So for example, you are traveling today. Let's say you're going to US. You have cash in Kenya shillings. So at the airport lobby, you'll change these Kenya shillings into USD. So each currency has its own value in the forex market. Okay, so you're giving out Kenya shillings. You're selling Kenya shillings, and you're buying USD. At the same time, this guy is buying Kenya shillings from you, and you're selling the Kenya shillings. You see? So basically, when you trade Forex, you trade in pairs. You trade in pair. So now, that's not enough. This is not enough.
Yeah.
So the main part is when to buy and when to sell. So technically, fundamentally, this is when you're doing business. Like you have to exchange no matter the rest that is available in the market for USD. This is not for business. Now this is you're exchanging because you want to use the dollar. You see?
Yeah.
So we also participate in Forex in so many ways, like buying items online. You're in Kenya here, buying an item from UK. So it means that you're going to pay in Kenya shillings, but again, the price quotation will be quoted in pounds. So the process of paying from Kenya shillings to pound, that is also Forex. So we apart from the normal trading of, of an idea of making money, we also trade it the indirect. That is when you're buying items from different sites, that is internationally.
Okay, in relation to that, there are those people who might say binary trading, indices, synthetics is part of Forex. Can you explain that?
Okay, we have what we call financial market. Financial markets. So financial markets consist of instruments like Forex, binary option, stock, synthetic indices, futures, sports, crypto. So any instruments of money falls under financial markets. Forex is one of the most liquid instruments in financial markets, and it's all about trade of currencies. Okay, have binary option. You have the stock. You can trade, for example, here in Kenya, you can trade Safaricom. Safaricom is listed in stock. Synthetic indices, boom and crash. Have you heard of boom and crash?
Yeah.
So you have futures. These are contracts. Have sports. You have cryptocurrency. Example of cryptocurrency:
Bitcoin. Ethereum.
So in this list, Forex is the most liquid. Also have commodities. Forgot commodities. So in this list, Forex is the most liquid, and that's why people trade Forex more than any other instrument. But again, they share the same concept. So sometimes you might confuse between Forex and other instrument. Okay, so they share the same concept, but again, I find Forex to be more reliable. Reason? Okay, the reason why Forex is more reliable is because it is purely decentralized. As much as many others are decentralized here, but I really don't trust if this one is 100% decentralized. There are so many manipulations here. These are computer programs. Binary, okay, binary is legit, yes. You can trade it. You can come up with a strategy, an informed strategy that can trade binary in a very profitable way. But people do not make money here. So the easiest way to make money in the financial market is by trading Forex because it's the most liquid. So liquidity comes from the volume. So it is said to have a daily turnover of about $6.8 trillion every day. $6.8 trillion every day that is circulating the Forex market. So that volume is what makes the Forex market more reliable compared to any other instrument in the financial markets.
Okay. This $6.8 trillion, it's only traded in Forex, not the other instruments.
Exactly. So now, You see, talking of volume, we have so many participants of this market who are bringing in good volume. You see?
Yeah.
Yeah. Like for example, if you have today, let's say you have USD, you have cash in USD.
Yeah.
We'll change that cash in USD to Kenya shillings.
Shillings.
Where will you go?
To the bank.
To the bank, right?
Yeah.
So that takes us to participants of the forex market. Participants of the forex market. So who participates in this market? So if you want to exchange your currency today, you'll go to the bank so that you can exchange. When you go to an example KCB today, there's a screen display there with different rates, and mostly they display major currencies, right?
Yeah.
Do you know why?
Because they are the most
Kama yen,
okay.
pound, CAD, Australian dollar, USD,
NZD.
NZD,
Yeah.
and what else? And CHF. So you'll be able to see.
They're
You'll be
being
able to see,
displayed.
being displayed there.
Mm-hmm.
So there's a reason why they measure in major currencies. As much as you can as well get other currencies, but they measure in major currencies because of huge transaction.
Oh.
We'll get there. So now, participants of the forex market, number one, are the banks. Number two, banks contribute, the commercial bank, to be specific, contributes up to 80% of the total volume, which is 6.8 trillion USD. So we have the banks, we have central banks. Do you know the purpose of central bank?
The
Do you know
purpose.
each and every economy has its own central bank?
Mm-hmm.
Do you know the purpose of central bank?
I think, according to me,
okay, central bank. Okay, the main purpose of central bank in each and every economy is to regulate the commercial banks and to provide liquidity, to provide volume to the central bank. Okay, so talking of what do you call? Talking of
central bank.
Post kwanza. Central bank also regulates the interest rates in an economy. Like for example, US the other day they gave us a interest rate, right, from the Federal Reserve Bank, and it was in the favor of the dollar. So it means that when interest rate is going up, the currency value increases because interest rates, like, they are trying to control the cash flow in the market. You see, so we have the broker. Let me just name the major one. We have the broker. We have what else? We have
hedge funds.
Yeah, hedge funds. You know the broker, right? Brokers is these are intermediary between traders and the market. So you cannot access the market either. You must access it through the broker. So hedge funds, what else? Retail client. Retail traders like us. Traders like us. So basically, these are the major participants of the forex market, and these are the one who provides liquidity to this market. Okay. So when you talk about liquidity, you'll see people trading GBP USD, Euro USD, GBP, JPY, and many other currencies. Why do you think they trade such currencies? Not Kenya shillings.
The major currencies.
Yeah. Liquidity. When you talk about liquidity, what comes in your mind? Or why do you think they trade major currencies?
Because of the volume.
Because of the volume. Okay. So now, when you want to make money in the forex market, trade major currencies. For example, USD, yen, pound, euro, CHF, Aussie dollar, what's the
AUD,
Canadian dollar,
NZD.
NZD. So these are the major currencies in the market because they attract huge volume. So you realize that the reason why we trade major currencies in the market is the cost of transaction. Okay, but again, you trade exotic currencies, for example, ZAR or Kenya shillings or any other from emerging economy, the broker will charge you highly. So in the process of increasing the spread, in the process of increasing the liquidity, the spread widen.
Okay.
You see, so it is advisable to trade these major currencies. Okay, if you want to really make money in the market.
Oh.
So now, what about market hours? So you realize that this market is open 24 or 5, Monday to Friday, right? You can trade Forex Monday to Friday. But again, we cannot be in the market all the time because of the sessions. We have different sessions in the Forex market. Sessions, or let's call them market hours. Market hours. New York session. Forex. London session. London session. Let me just Sydney session and Tokyo session. So you have the 4 sessions in the Forex market. And you realize that most traders will trade this session, London session and New York session. Why do you think they do New York session and London session more than the rest?
The major countries.
Yes.
The major currencies, the major economies.
Because of volume, right?
Yeah.
So traders will pay attention with the movements of the New York session and London session because of volume. So now we said participant of the Forex market. Example of a participant of the Forex market is commercial bank, right?
Mm-hmm.
And commercial bank gives approximately 80% of the total volume that is circulating in the market. So for that reason, commercial bank doesn't work 24 hours, right?
Yeah.
So it works within business hours. Like for example, in Kenya, bank will start operating from 9 to 4, 9 to 4 p.m.
Okay.
So that is business hours of our economy. And that is when the economy, what do you call, economic catalysts that is affected by the financial institutions will be taking place, right? So now, for that reason, the New York session starts at around 4 p.m. 4 p.m. South African time, and here around 11 a.m. depending with the session. Okay, so it means that when you are in East Africa, you start seeing some good movements of the market at around from 4 p.m. or 11 a.m. because of good volume. So New York session covers the entire America. Okay.
Okay.
London session covers the entire Europe. That's why you're saying 11 a.m. So at 4 p.m. now is the start of business hours in US and other American countries. So it comes with good volume. And the market is all about liquidity of volume. So the volume is what will give us an opportunity to trade in the market. So these are just, by the way, I think the best session here that you can make money, especially the morning hours, and it's at around 1 a.m. 1 a.m. is Sydney session. Then there's an overlap from around 3 a.m. Sydney session and the Tokyo session. At the same time, there's an overlap over of a New York session and London session from 4 p.m. to 7 p.m. That is East African time.
Yeah.
Yes, so that is all about the market hours over Forex. So generally, we say this market is decentralized. Decentralized, right? The market is decentralized. Decentralized means it stands by itself. It is not okay. It cannot be controlled by anybody, any institution or whatever. So the institutions are there to provide liquidity. All right.
Okay.
So you realize that these currencies are controlled. The value of a currency are controlled by daily economic activity that is taking place. E.g., interest rates, inflation rates, employment, and unemployment. What else? We have some natural calamities. For example, pandemic. So these are basically what controls the value of a currency. So when the interest goes up, when the interest rate goes up, then it is trying to limit the cash flow in the market. So there will be demand of that particular currency. Okay,
Yeah.
the value will increase, and vice versa. Inflation rate. This is all about purchasing power. For example, right now in Kenya, when you have 2,000 shillings, you'll buy less items compared to 2 years ago. That is what, that's all about the inflation. Purchasing power. Employment. When there's unemployment, when there's high number of employment or job created in an economy, then it means that the economy is doing well. Natural calamities, these are some things that you cannot predict. For example, pandemic. 2020, we had coronavirus. So there's a way it affects the economy. You see? So basically, these are the list of what controls the value of a currency in the market, not any person or individual controlling the market. So you see, newbies, they do say, when I go buy, somebody is selling.
Yeah.
When I sell, somebody is buying. So basically, we are giving you some basic background of what you should understand about Forex. Then from there, you start checking the charts.
Okay, as a beginner, how will I know this nini? How will I need this information? Where will I find it?
Okay, now you don't have to scratch your head for you to get all this information. So once you're introduced to Forex, after knowing what Forex is, there is 3 types of analysis in the Forex market. 1, technical analysis. Okay. 2, fundamental analysis. Right? And 3, sentiment analysis. So technical is all about the prices, the price fluctuation of which will be given in form of a chart. And you have the charting software for this. So fundamental analysis is given in form of economic calendar. So you have an economic calendar that will give you all that information about the major economies. Like for example, about the inflation rate, about the interest rate, about the rate of employment, or any other economic catalyst that might come in the calendar. So it will give you, like for example, days on Saturday, right?
Yeah.
So on Monday, you will have all the list of economic catalysts that will come in the market. So you can, the list of the entire week. You see, so it can be so easy for you to plan yourself on how you're going to trade those news. Sentiment is all about participants' views about the market. Like for example, when you go to the chart, first thing you'll see, of course, it'll give you some hint that I'm supposed to buy or sell. Yep. So basically, Forex is not all about buy and sell as they put. So there are so many things that you have to put together before you get to a point of buy or sell. See you next time. Do you have something to tell?
Please share, comments, and subscribe to our YouTube channel at Marvian. And follow us in all our social media platforms, IG, Facebook, and TikTok.
As you said, follow us in all social media platforms. Subscribe, share our content widely. Peace.